Hi, I'm Garth McKenzie from traderscorner.co.za. Today I'm taking a look at the S&P 500 and I'm also going to take a look at the Russell 2000 ETF. So let's start with a look at that S&P 500 chart as I mentioned. Now we begin with a look at the daily chart of the S&P 500 here. And what's evident is that this market has been generally consolidating over the last month and a half or so. It pulled back a bit in early May, but it's managed to recover those losses and it's now once again bumping up against all-time highs. The key level here that we're watching at the moment is 42.35. We've got to watch that as the resistance area that would need to be broken to the upside to then continue this upward trend and go on to make new all-time highs for the market. At the lower levels there, 41.75 is the first immediate support level. And a little bit below that, we've got the 50-day moving average, which would come in at around about 41.50 if we saw any weakness towards that area. So overall, it does still look as if it's a buy the dips kind of an environment, but we need to see that market break above 42.35 to then open further gains up probably towards 4,300 for the S&P. Let's take a look also at the hourly chart here of the S&P 500. It just zooms in more closely on this recent trading activity. And there you can see the significance of those levels that I highlighted on the previous chart. So at the upper end, 42.35 is overhead resistance. And down at the bottom, 41.75 is the first area of support that we had watched quite closely. A break above 42.35 would be a bullish break, and that would push us up into all-time high territory. And as I said, probably open the way for a move towards 4,300. The inflation data this week, Thursday, is going to be closely watched. And I think for now, it kind of feels like this market is marking time ahead of that inflation data. But we'd have to see on Thursday what that data looks like and what that might mean for any future tapering of stimulus from the Fed. Then let's turn our attention to the Russell 2000 ETF. That's IWM is the code for this ETF. And what's evident over there in the last 4 months or so, you can see how this ETF has really been tracking sideways, but it has been narrowing into the apex of a triangular type of structure. And it's beginning to break to the upper end of that structure. So $230 is a key level on this ETF, and it's starting to break out above that area now. Down at the bottom, 215 is where there's support, but I would think that a break above $230 here, if it can be sustained, would be a bullish move, and that could quite likely open a move into new all-time high territory for this ETF. And lastly, then, let's have a look at the hourly chart, again, of the Russell 2000 ETF. That's the IWM. And there you can just see more clearly the significance of that $230 resistance area. Notice how the market's been bumping up against that area in overnight trade, and a break above $230 there would be bullish for further gains. In the event that there was a bit of weakness, well, then there's support. The first line of support sits there at around about $227. So overall, still a bullish looking chart setup here for this Russell 2000 ETF. So to summarize, really, we're looking for both of those, the S&P 500 to break above 42.35, and we're looking for the IWM, the Russell 2000 ETF, to break above $230. Both would be bullish, and both would point to potential new all-time highs for the markets. That's all I've got for you this week. I'll be back again next week with some more market analysis.